Curious whether a Roth 401k or a traditional 401k is better for a recent grad's new job? Let's break it down. Welcome. Every day, I break down personal finance questions asked on Stack Exchange, highlight the community's best answers, and sprinkle in some actionable takeaways. If you're into learning a little more about money each day, make sure to subscribe to the channel. Now let's dig into today's question. Today we're exploring a common question. Should a recent graduate choose a Roth 401k or a traditional 401k? Here's the original question as it was posted to Stack Exchange. I'm going to scroll through it quickly so you can see the whole question, but feel free to pause the video if you want more time to read it. Don't worry. After this, I'll walk you through the key points of the question so you get the big picture. So, in summary, a recent graduate is gearing up for a new job and wants to take full advantage of their employer's 401k matching policy. They're trying to decide between investing in a traditional 401k, a Roth 401k, or a mix of both. Their main worry is how future tax rates and their retirement tax bracket might impact their choice. Here's the top-rated answer from the community on Stack Exchange. I'll scroll through it quickly so you can see the full answer. Feel free to pause the video if you want more time to read it. Don't worry, I'll highlight the key points of this answer in just a few moments. In this answer, it's noted that future U.S. income tax rates might increase, making Roth contributions potentially advantageous now. It also highlights that employer matches in a 401k are pre-tax, regardless of Roth contributions, providing flexibility if future tax rates decrease. Now, before we jump into the next part, if this video has been helpful so far, be sure to tap the like button and subscribe to the channel. We post new personal finance videos every day to help you make smarter money moves. Here's another answer that was shared in the Stack Exchange thread. Like before, I'm going to scroll through it quickly, so feel free to pause the video if you want to read it yourself. Otherwise, I'll highlight the main points of this answer in just a few seconds. One response points out that maxing out a Roth IRA lets you withdraw the principal tax-free anytime, making it handy for emergencies. While employer plans have perks like matching contributions and higher limits, IRAs offer more investment options, giving you greater flexibility. Here's one last answer from original post on Stack Exchange. I'll quickly scroll through the answer so you can read it. Feel free to pause the video if you need more time. And just like before, I'll be highlighting the main points of this answer for you in just a few seconds. One response points out that understanding the difference between average and marginal tax rates is important for financial planning. It suggests that new hires, often in lower tax brackets, might benefit from a Roth account, while higher earnings later could make pre-tax deposits more advantageous. All right, now that we've seen what the community had to say, here's our take on this question. If you're expecting your income to rise in the future, a Roth 401k might be a smart move since you'll pay taxes now at a lower rate. On the other hand, a traditional 401k can help maximize your take-home pay today by reducing your taxable income. Combining both options can offer tax diversification, providing a hedge against future tax changes and retirement needs. In this video, we've covered how Roth 401k contributions are taxed upfront, which might save money if future tax rates climb. Traditional 401ks, on the other hand, reduce today's taxable income, handy for those in higher tax brackets now. Plus, employer contributions are always pre-tax. By combining Roth and traditional accounts, individuals can enjoy tax diversification and greater flexibility for future financial planning. Thanks for watching. Before you go, did you learn something new from this video? If so, be sure to drop a like on the video to let us know.